So we're doing a little Q&A and review for today's price action. If you're looking for the live stream recording from this morning, unfortunately it was corrupted due to my drivers just timed out for whatever reason. So the recordings for both times that I attempted it are both corrupted. So unfortunately that's not going to be posted. But if you're new here, or if this is you just forgot what these are, it's just a standard review session that will be recorded and obviously posted up later. But any questions that you have related to today's price action, psychology, model related stuff, anything, you can put those in the chat here and we'll get those answered as well. So we're gonna go kind of just do a going through bias and the lower time frame price action. I personally didn't take anything today on the stream. So kind of just what I was looking for, what didn't really pan out, and kind of expectations coming into the rest of this week. So coming into this week, I don't know if I did we didn't really have a review or anything yesterday. We had a little market review, but there's nothing much. I'm going to send this little text here for reference. Oh my gosh. This is just for reference. This is a text that I sent out to a couple of the guys that I'm personally mentoring in my personal life. This text was sent out early Monday. And I also sent this out to the daily bias chat for the private group as well. Basically coming into the week. So both that little text message there that I sent out to some buddies, as well as the bias that I sent out into the private group. You can read that if you want to, but in the text message, I was saying once CPI comes out, I'd favor it to come up and take previous weekly high, and then preferably it's going to drop back into a bearish week. And I mentioned in the review previously kind of what I was looking for on the 12th coming into this week. If you haven't seen that, or not the 12th, it was the previous weekly review. But how did I know it was going to be a high of week Tuesday? And obviously I don't know that it's going to not come up and take this, but right now it's setting up perfectly for a bearish week. And how did I know, or not know, but anticipate this kind of price action unfolding? We're not supposed to be picking tops at all-time highs, as you probably know, and you've probably heard before, and I've said it before. But what makes this different? And I think this alone is one of the most important pieces that you can get maybe out of this review today, other than some other lower time frame stuff. But to me, this is the most important, because if you're able to understand bias, if you're able to understand the variations and when certain things are going to play out and when they're not, I think it is one of the most important things in, obviously, an ICT perspective, but overall draw a narrative. Once you have a good model, as long as you can get that draw and liquidity right, your entry model is going to be kind of easy, I think, or easier than it normally would be. If you don't have a bias or don't have a good understanding of what price action is likely to do. So coming into this week, we have a couple of things. Obviously, a news-filled week, right? We had, let me go to a higher time frame here. I don't like that. News-filled week. We had a seek and destroy profile from the previous week. Okay. Now, this seek and destroy profile, we covered it completely last week on Friday or on Saturday, whenever that market review was. So if you want to go in and study that, you can. But in that review, if you go back and watch it, I say that as ICT says, with that specific profile, you probably want to be sitting out. And the result is one of the most important things, because if you see this play out, especially with what we're getting right now in terms of time of year, this kind of seek and destroy weekly profile, when you see it, you're anticipating potentially a longer term reversal. And if you actually look at the seasonal tendencies for the indices between the months of July and normally August, you have this kind of retracement going on. I'll see if I can pull up a seasonal tendencies chart for you, just so it doesn't look like I'm pulling it out of my butt. Here you go. So this is a bit of an older screenshot, but it'll still serve its purpose properly. This is between the years of 1997 and 2021. As you can see, the black line is the 25-year pattern, so the longest pattern that is available. You can see in the months of around mid-July, pretty commonly, you have this retracement back into the range, into August. And August consolidates, as you probably know, if you've been here for a little bit. You can see even on the 10-year, you got that anticipation, a little bit of slight drop, and even a bit on the 5-year. You can see that just tiny one here, and even late, like I said, into late July. So not something that you want to be, oh, it's this time of the year, this is always going to happen, but rather using it as another penny on the scale, right? So we have a seek and destroy profile, which as a result normally can give us a longer term reversal. We have a news filled week, so you're expecting kind of a potentially a larger range, preferably. We have seasonal tendencies, and then we have also another key indication to me was, like I was saying, I want CPI to boost up, take the previous week high, etc., and be a bearish week, but an early weekly move. Okay, anytime you have a move earlier in the week, like Monday or Tuesday, that's building in kind of that sentiment and the narrative of this is where price action could be going. Not all the time do you see it start to expand and create a reversal, but if we have an early week move, the chance of you getting a midweek reversal is much higher, right? So all that kind of panned out coming into today, where to me it was playing in beautifully for what I was anticipating for the price action. Now I didn't get an entry today, but still seeing that work in should preferably give me a bias for tomorrow, Thursday, and Friday. So as you see, Monday, nice energetic run up, takes out the previous weekly high. And then CPI comes in, obviously kind of fills the numbers, creates the potential high of the week. And then we got bearish price action for today, which is going to be kind of confusing if you're not trying to pick tops, right? So there's the kind of explanation for that in terms of, and not a lot of this is not even in the charts. You know, most of this is actually outside of the charts. And it's when we look at the charts to kind of confirm our bias, do we see everything pan out? So that being said, on the 1 hour chart, you know, we come up, take previous weekly high. We have kind of this lackluster price action, I think, coming into midnight open, right? You don't really have a lot of respective PD rays. There's a lot of this kind of lethargic candles coming back and forth. And eventually CPI comes out. We've got SMT at the previous weekly high with YM. I'll pull this up for you. You can see up there, and down there. So SMT on previous weekly high. It's a good indication. We also had SMT with the 8:30 news and the current session high, which I can pull that up as well if you want to see that. You can see the 8:30 news right there, SMT, 8:30 news right here, SMT, right? Obviously, you can see the SMT here with the Asian session. So all that lining up nicely for, okay, potentially today is going to be bearish. And now for my bias, though, for today, you know, coming into the session was I'm not going to, you know, I still have to be careful. If I'm putting too much weight on the fact that, oh, okay, I got this, right? Seasonal tendencies, blah, blah, blah. That's all lining up. But if I marry my bias and it decides to shoot up, I can also reason as to why I would do that, right? Especially if Tuesday potentially shoots up and then Wednesday creates the reversal and then it drops down continuously after that. What's saying that it couldn't do that, you know? So I have to still be reasonable and look at the price action and when I wake up in the morning, I'm still weighing both sides. You know, every single day I'll be weighing both sides, even if it looks perfect for what I was expecting on Sunday. You know, there's got to still be reasoning and logic behind what's going on. So, you know, coming into it on a 15-minute chart and a 1 hour chart, it didn't look like it was already dropping into 930, right? It didn't form this as the high and we were bearish and it was coming all the way down here. And oh, okay, you can look for a short position on demo. It was still, for the most part, respecting bullish PD rates. So what do I need to see in order to say, okay, this is now what I like to see as the weekly high? Some sort of inversion level. Okay, we already had the SMT. We already have the run-on stops from previous weekly high. So higher time frame PD rate, SMT. We just need to see some sort of inversion array show up where there's now this violation of order flow, a confirmation of reversal that indicates, okay, it wants to go down. So my bias for this morning, although I was bearish for the week, although I was saying Tuesday high of week on Sunday, this was my bias coming into the morning. Okay, this is right here. Here's a screenshot from the morning. I said currently I'm bullish. You know, reading the order flow. Okay, I'm bullish, unless we can get displacement through the M15 bisi and pass main threshold of the bullish order block. I have the bullish order block marked out here, and then the inefficiency I was looking at, and I was actually favoring for it to drop through that, as we mentioned. So I wasn't looking for a 930 soup today. To me, to short it right at 930 is definitely, in hindsight, such a great play. And I think I did have the conviction to do it, but trying to top tick, the weekly high is just something that I'm not in this situation. I just wasn't comfortable with doing. So I would have rather wait to, in my bias, rather wait for it to drop through main threshold of this order block, drop through this, and then look for a simple continuation entry to target, this low if it was available, or this low or this low. Got this original consolidation that I marked out on the stream. Because especially at the fact that if this is going to be the weekly high up here, and I'm getting in here, it still has plenty of room to run. So if it were to take out London low, retrace on me, give me an entry that's later in the move, I may miss the high of the session or the high of the day, but I'm still getting a decent entry, and I expect it to continuously move in that direction, right? So unfortunately, with all that playing in, I didn't get an entry. On the stream, if the recording was up, you would see me just kind of sitting there looking for it, zoning in, but there was never really anything that was high quality in there. And you still see pretty good session dynamics going on in terms of the targets, and in terms of the actual time of day is all kind of panning out, but the actual price action on the lower time frame was just inconsistent with what it normally shows. You have a nice little order block in here that marked out with the midnight opening price, which is overlaid here as the OB target from the stream. And you can see in here very nicely let's actually start on the 5-minute. On the 5-minute chart, we have this 930 runs the stops there, forms SMT, drops down through a swing low, through a gap, and through a breaker, right? Like through the high, low, higher, high. This would be the last down closing candle. You can call that a SysD, right? So confirmation 1, confirmation 2, confirmation 3. Okay, so now we're just going to look for a 1-minute sibi to form, preferably within macro time, but it doesn't have to be. So then get in line with order flow, and boom, it's going to tank. This is my expectation. We had a nice inefficiency form up here. I'd favor us be left up as a breakaway gap. Clearly was not respected as such. But on 1-minute time frame, you can kind of, if you're watching it today or watching it this morning, you just know it was subpar, right? 930. Let me fix this. Give me a sec. Yeah, if you're watching this morning, it wasn't the greatest, right? And if you got a short entry, I'd love to see what you were using, but what I'm personally looking for just wasn't there. You got drop down here, trades back up into market structure shift. You could say really any inversion array or whatever. Drops down again. Still no first presentation gap at all. You got a tiny imbalance there. Runs the London low, comes back up into the order block, and then it continues to drops down again, still with no inefficiencies. There's another tiny one there, but there's nothing like this, right? Or like this. This is what I want. I want this kind of displacement, this energetic rundown, and then to take that, especially with an order block. That's my kind of go-to entry, or even a SysD off of that. None of which, goes on. We have this instead. We have this deep retracement back to premium, filling that 5-minute inefficiency, and then eventually it slow grinds back down and then drops into this. And you can see here on a lower time frame, 930 swing high, 1030 to 11 form the swing low there, right on time, tagging into that order block, and plays out, in terms of session, in terms of bias, it plays out nicely. But this is one of those things that sometimes is going to be frustrating for new traders and even intermediate traders where you get everything right and it doesn't give you anything as a result. Um, and it's even more frustrating if you've taken multiple losers in a row, and now here's an entry that, or here's a day that starts panning out amazing, and it doesn't give you anything. This is where a lot of times you can either break your rules or take a bad entry, and if you manage your risk properly, it's going to just be a learning lesson. If you don't, it's going to be something that stings and stings bad, um, because you're just super frustrated in the moment and unable to see it clearly. And this is especially where, in this kind of scenario where everything may be right, or you're looking at for something, and even if you didn't see it perfectly today, but I'm saying if you believe, okay, my weekly, my daily, my session are all lining up, I think this is a strong drawn liquidity, and it doesn't give you an entry. Or for example, it gives you an entry and then you get stopped out. What is that going to do to your mental? Are you going to continue to push, 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 and then eventually you blow your account, or you get your daily loss limit or whatever, or even you just push yourself further into the hole than you need to do, you know? That's just something that has to be mentally considered when you approach this kind of scenario, because it's just something that has the possibility of doing damage, doesn't always have to do damage, especially when you understand it. And excuse me, the simplest way to look at it is black and white. There is no could have, should have, would have in trading. So when that kind of scenario shows up, the what is, the concrete evidence is you didn't get a setup, right? You can get step 1 through 9, and if step 10 is missing, you don't get an entry. And the only reason that would be a problem is if you place a lot of expectation. You're thinking too far ahead of what could happen instead of looking and dealing with what it is right now. What it is right now, okay, it's doing all this. It's not giving you an entry, and I'm very happy with myself for not taking anything today, um, on the stream or in demo or whatever. Because of the fact that, when you look back at the price action, it's just not something that actually has any. Um, oh, I could say here's a high quality entry. Even during the 1050 macro, you look at this right up here. You have 1050 digging into. There's no sibi over here. Just drops down aggressively, digs into the order block, forms a swing low, and then it starts retracing back up, back into premium. Running stops there, and then it drops down again into lunch. Then it comes up again, runs the stops, and then it comes back down and sinks all the way down to Asian low, eventually in post market. So, it is what it is. Maybe it's frustrating for some people. That's perfectly fine. And this is why journaling is going to be extremely important. So when I go into my journal today, basically just saying it's just you get to leave work early, in a sense. I was around, it was around here, 10 or so, when it started trading back up into this breakaway gap. I was like, yeah, I'm just gonna call it there. Turned off the stream, closed out the charts, because I know there's at that point there's not going to be anything that I want to get in. I don't want to use the last ditch macro on an 8:30 news day. That's just not something I prefer to do, especially when it's already given me with this willingness to come down, take out the sell side. It's not like it was consolidating for that time and then it's using the last ditch. It's running back the stops here. So in terms of my own model and what I've seen for an 8:30 news day, I want to be getting in around 9:30 or 10 o'clock latest, because the engine has already started here. You already have sufficient volatility coming in at 8:30. So all of this price action technically is tradable at 9:30 as well. And you can see, most of that volatility and the move of what I would like to trade in hindsight would be in here, right? I think that's pretty reasonable. You can see everything kind of playing out, and then it kind of just consolidates and stays within the range after that. And there's obviously things to learn from. I tried looking at that. We've got a 2-minute gap, I believe, on the lower time frame here that was retraded into a couple of times there and there. But even in hindsight, I look at this and there's not really any clear order block it's trading into. There's no clean breaker on this end. I would have liked that a little bit better. But even the inefficiency here, and this also isn't macro time, which I said isn't needed. But to see something like this retrade into that gap and then don't have any real displacement or assistee or anything after that. If I had gotten in here, for example, at 948 after the reaction here, stop loss up there, take, maybe a partial here, I would have got maybe one partial and stopped at break even or in profit at best. It didn't happen, but I'm saying, okay, if I like to, even days that I don't take a trade or days I lost, just kind of go in and see, okay, where could I have gotten in, and be completely honest with myself. I really just don't think that, for me personally, there's anything in here that I would have taken and say, yeah, that's something that if I were to take that over and over and over again, that's going to net me a good amount of profit. It's going to be one-offs, or, oh, I can see this here is being used today, but that's not something I would normally use in price action, right? I'm not going to say, oh, look, there's this inversion PD array being used on this side. If only I had seen this being traded into during X time, I could have gotten my setup. I'm not going to be able to see that in real time. Or if I do see that, I'm not going to be like, yeah, that's the trade I'm going to use today. Because otherwise, I'm going to end up trading every single PD array in the matrix, and you get lost. You don't want that. You want good, clean, repeatable models that have logic behind them. You can have a variance in the models. There's no issue with that. I have maybe 4 or 5 different entry models that I like to use. I like SOUP. I like lower time frame SysDs on a 15-second or 1-minute chart. I like retracements. I like breaker entries. That's really it. Maybe so like 4. So there's no problem in having different entry techniques, but if you have too many, or if you look at the chart with all these missed opportunities, pseudo missed opportunities, then you get lost in price action. You think it's too hard. It's not too hard. We are in some a bit more challenging conditions. I do agree. Doesn't make it impossible to trade, just means you have to be very selective with what you want and capitalize on those moves. We have PPI tomorrow. We have 8:30 news on Thursday. We have 10 a.m. news on Friday. If you look at your economic calendar and you look at that Friday U of M consumer whatever, it's marked as orange folder, treated as a red folder. It used to be a red folder back in the day, and then somehow they changed it to an orange folder. I didn't know that was possible, but there's pretty high volatility on that news driver, so just treat it as a red. So we have red folder news the rest of this week. Wednesday, Thursday, Friday. To me, we have on a 4-hour chart here, we got kind of a meh SysD. And we do have this gap, which is building in perfectly for tomorrow. So I'd love to see how that plays in. I am watching this gap with the order block here. On a 1-hour chart, it looks pretty healthy to me. Especially if we can stay below mean threshold of this order block. You got order block here. You got inefficiency on the 4-hour chart. So I'd love if we get something just like this. I think these relative equal lows are great to target. I also think that we're likely to go further than that. I like this sell side here. I also like the breaker and the inefficiency that I've marked out here on the daily chart, kind of anticipating that larger time frame drop. If you want to be a little bit sweaty, you could use your fib projections here, and you can see it puts you down a little bit further, assuming that this is going to be used as a last manipulation. And we'll see going into tomorrow. And I'm not making this a hard bias or anything. I said in the beginning of this, you want to keep an open mind. You want to not mirror your bias. You don't want to overly commit to something. You want to come into every day fresh and look at it through a clear lens. As soon as you don't look at it through a clear lens, you anticipate something, you're expecting something that's not there. That's when you take bad trades, and you lose as a result. So when I wake up in the morning tomorrow, although maybe I'm liking some good price action to pan out finally. We got kind of cooked last week. I got cooked personally last week. I took a tiny scalp on Monday up to the buy side. Tuesday, no trade. So I'm still kind of sitting in the red, break even. Does that matter? No, not at all. We got plenty of opportunities. And like I said, I'd favor it for it to drop down. But if Wednesday morning we open up here, or we're trading through mean threshold or whatever, I'm perfectly fine with going long and being wrong on that bias. Sometimes we have an addiction of being right and proving to others that we're right. When in reality, no one cares if you're right or wrong. You know, no one cares about your P&L. No one cares about no one cares about anything, because you post it, they'll see it for 2 seconds and then you're on to the next whatever. So if you have this addiction to being right, and especially addiction to being right in front of other people, it's just cancer to the brain, because your ego is so attached to that one decision that you may or may have not made consciously. Maybe subconsciously you have this addiction to where you think price action is going to go, that it's almost impossible for you to look at price action through a clear lens. You're always, when you wake up in the morning, before even looking at the price action, you'll say, oh, I wanted to do this, or I wanted to do this, or I needed to do this, or whatever. Can't look at it like that. You come into every new day fresh, with no recollection of the past and no focus on the future. It's a constant, trading is a very constant present moment thing, is what I've realized for me personally. The more that I focus on the future, the more I focus on the past, trading almost becomes impossible, because you can't focus in the moment and you're constantly obsessed with outcomes instead of the race. It's a marathon. So when I'm in the morning, I get off at 10 a.m. 10:10. That's work for the day. Maybe 40 minutes of work. You go on, you journal. Takes another 10 minutes, whatever. I know that's the rest of the work I got to do for the day. It's an easy kind of life in that sense for the actual work perspective, but like I said before, the work in trading is patience. It's patience. It's understanding how to, in a sense, control your mental capital, and that's work that 99% of the population cannot do. Right? So I know that I have to wake up, look at it, journal if I take a trade, whatever, and then I come back in later in the night or later in the day, review it, look at it. That's it. And I have no recollection of yesterday. I have no focus on tomorrow. So tomorrow will take care of itself. So I'm gonna be, we're gonna wrap this up. I'm gonna get off the charts. I'm gonna go do whatever, go to sleep. And that's that one day completed. And as much as you can focus on the present instead of having streaks of winning or streaks of losses or whatever, just focus on the one thing that you have to do today. Best thing you can do. I think that's the best advice I could give someone who's maybe struggling with psychology or struggling with keeping their own rules, is if you break it down to just one day. Okay, I only got to do this today. I don't got to do it tomorrow. I don't got to do it from yesterday. It doesn't matter what I did yesterday. Just today. It's so much easier to just relax and kind of have this almost nonchalant, like, carefree mindset, especially if you trust your ability to trade. If you know that you're a good trader, you know that your risk management is proper. And the way you know that is by actually looking at the numbers, running simulations if you want. Then there's nothing to think about. You're just doing, right? There's nothing to think about. You wake up, price action is good. All right, you look for the setup. Setup's there, take the setup. Who cares about the outcome? You manage your risk. That's how we have to approach trading. And it's a very weird approach, because there's no other job like this. There's no other profession that kind of meets these requirements that the professionals of trading are held to a certain standard that's above every other profession. So you really have to reshape your whole mentality about things. And it doesn't mean that you end up changing your scope of life or changing the way you look at everything. It's just rather trading itself. I love winning. I'm a very competitive person. I love playing sports. I love playing games. And I love to win. I'm addicted to just not even winning, but just really just beating people. I love beating people. I don't hate losing. I don't really hate winning. It's just I love the competition. So that hasn't changed. It's just in trading, it's a whole different beast. It's a whole different, winning and losing has no place in this. And that separation itself sometimes takes time, to be honest, and it takes understanding. And the understanding either has to be gained through experience or through learning from people who have been through that and the reason that I'm so big on psychology as of probably recently is because I think that I've put out a decent amount of technicals, but not enough psych sometimes. So as much as I can focus on each individual lesson to have some sort of psych bit, I know is going to be beneficial to at least someone who's going through it or is struggling in that kind of realm of trading itself. So I don't want to make this too long. I said it's going to be quick. It's already 30 minutes. Seems to happen every time, but it's not 2 hours at least. So expectation for tomorrow is this. I love to see that, especially if we can stay within this breaker in here. It's kind of a weak breaker, but on a lower time frame, you see it high, low, higher, high. If we can stay within this IRL on the 4-hour chart and PPI drops, I'd love to short it into 930. Streaming wise, same exact criteria. We're looking for high quality price action. And if there's nothing there for Chop City, I'll be sitting out. I'll be maybe taking a scalp at best, but I'll be sitting out and carrying on into Thursday, Friday. For the people in the private group and those who watch this back, I will be on vacation from Friday to Sunday AM. So Friday AM, there will be no stream. Probably won't be any reviews throughout the weekend until Sunday. Sunday we'll have a review and Q&A for that Friday's price action, and then any subsequent questions that may have built up over the weekend. But there should be streams, the rest of this week, assuming price action is good, and reviews as needed for myself and for anyone who has questions. All right. So appreciate you guys sticking around. Hope you learned something today. I know there's not a lot of lower time frame price action stuff to study, but hopefully the higher time frame in the beginning and the psych bit at the end can assist you in some manner. If you got any questions, you can shoot me a DM. I've caught up all the way, so should be pretty quick response. May not be by tonight, but hopefully tomorrow when I'm on my computer, I'll answer you quick. Obviously, if it's anything psych related, model related, concept related, you should send me a DM or you can ping me in one of these chats and we will go through it. All right. So this video will also be uploaded by tomorrow morning. If I forget, let me know. And yeah. So make sure you get your rest. Journal if you have not already, please. I promise you, journal is a fantastic resource and is required for every trader. If you want to be successful, you have to journal. Just part of the job description. All right. So journal if you haven't already. Do the things that are necessary to succeed. I'll talk to you guys soon. Peace.